Hello, traders. It's 8 a.m. Chicago time on Tuesday, the 17th of November, 2020. Thanks for joining me today in episode number 1881. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off sentiment pretty much across the board. We're seeing crude oil coming off 61 cents. It's the laggard today, trading at 40.73 on the December WTI contract. That's about 1.5% down. The Russell's off 18.9 points. Russell's really taking some big swings here. Down 1.06%. The Dow's off 265 points. The S&P's off 26 points. And the Nasdaq is slightly higher. The Nasdaq's trading at 12,027 and a quarter, up 22.25 points or 0.2%. The Nasdaq is benefiting from news out of Tesla that Tesla would be joining the S&P 500. Tesla was popped higher 11% on that news. The leader today is the cable, followed by the bonds. The bonds are up 26 ticks, almost a handle, and the 10-year notes up 7.5 big ticks. Gold is trading at $18.90, up $2.50 or 0.13%. So risk off. The market's done nothing but to sell off slightly overnight. We're below the 3,600 in the S&Ps. And that's how things are shaping up so far. We'll go over the details in a minute. The calendar has a bunch of releases on it. Pretty busy calendar today, but mostly with talking heads. We did get ECB's Guindos this morning at 8 a.m. Retail sales, export prices, month on month and year on year came in for the United States. They were off. Retail sales month on month came in at 0.3% versus 0.4%. That's a miss. And then export prices came in at 0.2 versus 0.3. Import prices came in at negative 0.1% versus 0.3. Ex-autos month on month came in at 0.2 versus 0.5. BOE Governor Bailey speaking currently. We have industrial production in about 12 minutes for the U.S. Business inventories at 10, NAHB Housing Market Index at 10. Then we get Bundesbank's Bolts, and then we have ECB President Lagarde at 11. BOE's Ramsden at 12. We have Fed's Bostic at 1. We have Fed's Daily at 125. Fed's William at 2. Fed's Bostic at 235. Fed's Daily again at 250. Again, I think these guys are like lawyers. They just get paid by the minute or by the word or something. A lot of them are just running out. And then we have some tick flow numbers at 4 p.m. this evening and an API crude oil stock change at 4:30. Balance of trade out of Japan, that's a high tier figure. That comes out at 6:50 p.m. Eastern U.S. time. So that's what's planned for the day. The overall market sentiment. We did get Walmart this morning. We got Home Depot, both beat. Walmart same-store sales are pretty strong on online demand. Walmart posted a bigger than expected increase in quarterly same-store sales as a 79% surge in its online business powered overall rises in spending on electronics, apparel, and groceries. Again, Tesla value jumped $40 billion as the S&P is considering adding it to the index. Today we get Facebook and Twitter CEOs testifying in front of the U.S. Senate panel over content moderation decisions through the election. And then Amazon launches an online pharmacy to compete with drug retailers like Walgreens, CVS, and Walmart. And that's where we stand. The COVID numbers still hitting record highs, still hitting record highs as we come into the session today. Definitely definitely not looking good. So there's a strong recommendation to not go anywhere for Thanksgiving and to spread the disease around or the virus around. And that's where we stand. Oh, by the way, we have Fed's Powell at 1 p.m. as well. For some reason, it's not listed in my calendar, but I see it here in this other report. Fed's Powell, yeah, it's not listed on my calendar. So that's where we stand. Let's take a look at what we expected yesterday versus what we got. Yesterday was kind of an interesting day. The primary scenario yesterday is a push to about 21 for selling down into the 94 area or so. I expected us to breach below the century figure. So I was looking for a push up, then push down below the 3600, and then for it to come back up. That's scenario one. Scenario two, consolidate, open auction, pull back, and then push higher into the 3629, 3630 area. So that's 3630 right up here. 2627 being an obstacle. So 21 tests early, drop to about 94, secondary, pull back to the overnight point of control, push to 26, 27, and 30 up here. As you see it, this is what was planned out for yesterday. For one thing, notice that the 4-tick Renko has very few bars. Yesterday was a very slow, sleepy day. We had a nice open auction, and then we dropped into the 96.75, the 96.75 early on to set the low for the initial balance. So we did push below the 3600, which is right here. Didn't quite get to 94.75, 95. We missed that. And then we ran up to 23, remember the 21, and then was looking for it to come back and push through as expected on scenario one. Yesterday was a combination of scenario one and two. We did breach below 3600. We did push to the 21 area as discussed, but then on the retest to put in a higher low, consolidated for most of the afternoon and ran up on the close. What are you noticing here that seems off? Unfortunately, I can't wait for your answer. I hate that. I wish it was more in real time and not so delayed. But as the market crosses, this is the opening price. Again, here's the opening price. As the market crosses below, the aggressor selling is strong, and as the market pushes higher, we see it peaking out, but not really lifting very well. And then as we start to turn down, it immediately gets below, and it just cannot hang on to the opening price in terms of delta. And then this whole run up on the close just gets no respect, no lifting at all. Pretty good rotation, strong rotation up, and delta is just not with us. Now, the way this closed, there's a conflict in the way this closed because I actually put in the head trader channel on Convergent Trading that the drift higher is thwarted by news events and so on. But really, I expected a drift higher into the overnight. It failed, as I said, it failed twice. What I wrote was ES failed twice to hold below 3600. This wasn't expected. I really expected it to break down as I was pushing for, based on the context, I was looking for that scenario where it squeezes down into the prior range, potentially pushing to the weekly close at 81 and a quarter. And likely to continue drifting higher given that the shift in VPOC and volume on the close. So what happened was we shifted this VPOC up here on the close on what was pretty decent volume on the way up. It had pretty decent volume, but really overall the action has been non-committal on the buy side so far. As we push higher, we seem to have less and less commitment from buyers to continue to push higher. To me, the move up, as I said yesterday, is suspect. However, with the point of control squeezing higher, I expected this to continue to drift higher in the overnight session, and then from there it does what it does. And to me, this this is again, as I the word I used yesterday in yesterday's Trader Bite was this is suspect, and I still believe the rally is suspect here. On the review, the overnight session only did 206,000. The overnight session has normal volume, nothing special there. A relatively balanced overnight profile. It's got big prongs here and there. Of course, you would expect it to have some volume at the 3600 in the 3600 area, and it's battling in this gap zone we left behind yesterday. A push down in the overnight session, pulled back right to the mid, the blue line, for a continuation lower. So this looks to me like an impulse rotation, pull back to mid, classic, continue lower. And so the question is, does it consolidate here and push through to the upside, or does it consolidate here and squeeze lower? My expectation is it's likely to continue lower. Delta's negative. The overnight inventory is 100% short, so looking for a small pop towards that 3606 area, which happens to be the SOC, or the scene of the crime, on the Moderna news, but looking for it to pop to about 3606 to get into this cluster here. And it's likely not going to, my expectation is it's not going to break to the other side, and I expect it to continue lower to 81, and that would be my my primary scenario. So it's pretty unsexy trading right now. There's not much going on. There's not much going on that would cause me to believe that there's a lot of commitment from either side. So that's where we stand this morning. Looking at the bigger picture, because we need to check ourselves. Looking at the bigger picture, here's the daily RTH only. We just started the week. Again, very important that we keep in mind this 3506. It's 100 points away. But overall, yesterday we left a gap behind. We pushed higher. We squeezed away from last week's point of control. We started to move towards that all-time high at 36.45 and a quarter. But this is, again, this seems like it's getting ahead of itself, and the expectation now that we're breaking the low of yesterday, the one-time framing up on the daily, is coming to an end. I expect us to move quickly towards last week's point of control. The point of control last week, where are you? Point of control last week is 35.58 or so, 35.57. Not sure why it's not coming up. There it is, 35.57 even. And so that becomes the key target below as we rotate lower. There's some obstacles in the way, but I am expecting the market to rotate down. Again, it's breaking the one-time framing up this morning by opening up below, or likely opening up below. It just, to me, the run-up seems weak. Again, here's another day where the price is higher and the delta is just not participating to the buy side. There's not much lifting on the way up. So that's where we stand. Looking at what's expected for today. Here we go. Still waiting for US industrial production. Industrial production's coming out right now. Primary scenario for today. Primary scenario for today. Open up below the 3600, attack the 3600, consolidate, push into 3606, and hold here before failing and pushing below, again, below yesterday's range, filling in the gap, consolidating down here at Friday's high, and then breaking down into the 81 area. I'm looking forward to push into 35, 80, 81, and then come back up into the close. This is the primary scenario. This is '06, the '06 area. I'm looking forward to consolidate right here at last week's or Friday's high here in the 90 91. It's actually 90, and then break down into 81 80. If it does not get any support 81.80, it could easily trickle down and push into the naked point of control at 35.60. So the next area down will be 60 from there. Plenty of range, plenty of opportunity to make money and lose money, of course. And so that's where that stands. The secondary scenario is it opens and it drifts down into the 35.94, 35.92 area, consolidates, pokes through Friday's high at 90, then it gets an impulse up back into the range, consolidates here at the overnight point of control, and then starts to squeeze up to where it was yesterday, looking for 36.20 on that end. 36.20 up here and 94 down here. Okay, that's the secondary scenario. Okay, so look out for these Fed speakers. The news is important these days, as it has been for years now. But just be patient. It's I would not initiate on the open. Wait for the market to tell you which side is strong, and then start to trade from that direction. Watch your risk, and good luck. Take care.